Hello, welcome back, AI curious folk. I'm Michael Parekh, your human AI guide. This is AI Rhymelings, episode 64, and a lot to cover again as usual. I wanted to delve in a little bit deeper today because the last few episodes we've been talking about a lot of the technology innovations at Anthropic, OpenAI, all the newest models, all the competition that's going on, Elon Musk, etc. Today, I thought we'd focus on the theme, which is basically focused on what financial investors are thinking about all this AI stuff, and particularly for all the three big AI IPOs that are theoretically on tap this year: SpaceX in June, and then Anthropic and OpenAI later this year. Of course, the stakes on this AI tech wave are far bigger than any of the tech waves that I've basically gone through as a dress rehearsal for what we're going through today, starting with the PC in the 80s, internet in the 90s, social media in the early 2000s, and obviously mobile and cloud and all of the waves that we've seen. And in that time frame, the global addressable markets for this have gone from the US and Europe with 2, 3, 400 million potential users to over 5 billion, going to 8 billion users in the next 10 or 20 years. So this is the real thing, the AI technology wave. And there's a lot of core things that are going on that are fundamentally different from an underlying technology point of view. We've talked a lot about that in all my Substack posts over the last 2.5+ years, and then all the podcast stuff today. But what I do want to talk about, just to start the discussion off, and there'll be links for all of this in the show notes as usual. But the information had this big investor conference, and they had a good discussion of the pros and cons that were being debated by the major institutional investors. And in particularly, they focused on what they thought about the SpaceX and the OpenAI and the Anthropic IPOs. The reason, of course, is I've been calling them the Mega-AI IPOs. And that is not an overstatement, because collectively they're targeting, as I've talked about a number of times, over $3 trillion of potential market cap being created in one go with three IPOs. Just to put it in context, in the internet wave, which was the internet and telecom under the so-called dotcom moniker that I presided over at Goldman on the internet research side, effectively, I would say we probably had less market cap created collectively through all of that. So we're talking about maybe 10, 15% lower than what we're talking about today. The flip is, though, that the amount of dollars that are collectively being raised, not just in these three IPOs, but all the venture funds, and more importantly, the corporate investments in AI that is underway today, which this year, as I've said, is over $700 billion. In the telecom industry, in the dot-com era, as it were, maybe raised about $1 billion, $1 trillion, $1 trillion over a decade. We're talking about those kinds of numbers in collectively over 1 to 2 years, just this year, next year. This Wednesday, we're going to see, as I've said yesterday, 4 of the big Mag 7s report, and we're going to see just amongst them over $200 billion in investments in AI, CapEx, etc. So the core takeaways, and there's a lot in that piece by the information that I would ask you to take a look at, is that people were debating the three of them, each one individually, SpaceX, XAI, and of course Anthropic and OpenAI, who are both focused on the enterprise and the consumer markets, etc. And in general, as you'd expect, there were a lot more questions around SpaceX, because you've got Elon's basically got a kind of a stew going on with everything kind of thrown in there. You've got the rocket launching company, you've got the broadband wireless data company in Starlink, then you've got XAI, which has Twitter in it, or formerly known as Twitter, X as it is known today. And of course, the massive amounts of investments he wants to make into AI data centers and AI chips, which is under the Terafab moniker. And he's not content with just spending tens, if not hundreds of billions of dollars in the US. He wants to take it out all into space, etc. So, infinity and beyond, as was the famous catchphrase in one of my favorite Toy Story movies. So a lot of questions there, much harder for institutional investors to get their heads around, which is one of the reasons why Elon is focused on more individual investors. So they're thinking about raising about 75 billion dollars, which is a huge number by any measure. They're, the scuttlebutt is 20 to 30% of that could be targeted toward individuals. Tesla, as I've said on record, Tesla is the mother of all meme stocks in a public market, and it's no longer even a car company. And SpaceX is going to be competing very aggressively as the next major meme stock, to the point where Elon is making sure that he's using his clout of a mega AI IPO to go to the index companies, S&P, NASDAQ, etc., and basically saying, hey guys, I know you take about a year to accept new companies into the index, so that huge trillions of dollars of passive investment funds can then are forced to buy these stocks. If you want SpaceX to list on your exchange, you've got to give us entry in 15 days. So he's trying to create huge amounts of passive institutional and individual investors that are not looking at the fundamental valuations. And so it skips the normal seasoning of 4 quarters or more for public companies, which I think is a good policy. And I had a post up, you can Google it, We Are the Geese. I've talked about it on my podcasts and Substack, etc. It's literally like stuffing geese to create foie gras. It's something that is likely to happen, and if it's successful for SpaceX in June, it's likely going to be copied by OpenAI and Anthropic, and there are pros and cons to it, and I think it's a bad precedent to set. But we will see what transpires. So investors are all focused on this, and the ones I'm talking about here are the fundamental investors. They're the ones who are looking at the actual businesses, profit loss potentially, how much money is being invested, when might it come back, those kinds of issues. So there's a lot of interesting discussion, pro and con, that I would ask you to take a look at. But I wanted to flag that as issue number one that I wanted to talk about in terms of the investor debate, which will just get more earnest. And you can see a lot of my posts this year have already been focused on this, just because the numbers are so big, we can't avoid it. As I said, these are numbers that rival anything that the internet era did in terms of valuations by 10, 20% or more, and likely will be higher than that, because we're still in the early days of this AI tech wave. The second issue I wanted to talk about is OpenAI's ongoing IPO prep uncertainties. And I've written a lot about this as well. Again, I'll have the post markers in the show notes, and I've got a detailed post coming on it tomorrow as well. But the Wall Street Journal had a big article basically saying, hey, OpenAI's growth metrics are slowing down on the consumer side. They've been stuck at about 900 million weekly users for about 3 months now, since February. They were supposed to have reached that by the end of last year, but they were in the 800, nearing the 900 million number. Obviously, about a month or so ago, they had another extended code red to respond to Anthropic by shifting away from the consumer a little bit and focusing more on the enterprise opportunity with OpenAI Codex to compete with Claude Code and Claude Cowork, which I've written a lot about. And so one of the tests for OpenAI is going to be between now and, let's say, the end of the year, which is when they're hoping to do the IPO. And there have been a lot of discussions around potential internal debates between the CFO, Sarah Fryer, who I worked with at Goldman as she was a software analyst in the same area that I worked in. And now she obviously is the CFO of OpenAI. But she has been raising internal flags that, hey, it's going to take time for OpenAI to get ready for an IPO. And of course, the company, I have Sam Altman down, is very focused on getting that done as fast as possible and potentially ahead of Anthropic. And they won't be ahead of the SpaceX XAI IPO, because that is being targeted around June, which is Elon's birthday. So we'll see how that goes. This business of not having a whole set of identifiable, kind of set in stone growth metrics. It doesn't have to be just weekly subscriber numbers or user numbers, etc. It could be any number of things that they can start to establish and talk about. But the key thing, having worked with a lot of companies very closely in terms of getting ready for the public markets, is you've got to be able to kind of set expectations over 4 to 6 quarters at least, where you're able to execute, meet, and beat these numbers and really build a long-term confidence of investors, especially the institutional investors, on a global basis. And when there's a lot of mania around a new category like AI, like it was around the internet, etc., a lot of investors do forego some of that and just kind of play the momentum game and the musical chairs game. But it is important nevertheless. And so one of the things that I think Sarah's talking about is important. There's a lot of detail and nuance in the discussions and the debates that seem to be going on, which are logical at OpenAI. And I'm glad that that discussion is going on, despite the forces and counterforces around the company to go public and OpenAI to push ahead as fast as possible. So that's my second take that I wanted to touch on today on the financial market side. The third is now just stepping back and looking at things globally. China just shut off canceled the acquisition by Meta of AI agent company Manus for $2 billion. This was a company that was probably one of the most interesting companies after DeepSeek last year. And they systematically, even though they were founded in China, they moved out of China into Singapore. They got US investors like Benchmark, which is one of the top AAA VCs, as an investor. And then Mark Zuckerberg, no less, made a bid and then agreed to buy the company for $2 billion. So far, so good. But China, in the context of the current kerfuffles that are going on around tech and trade and tariffs and supply chains between the US and China, geopolitical issues, Taiwan, etc., they basically took a look at this and said, we're not going to allow this acquisition to go forward. So they're basically asking it to be unwound. And by itself, this is an important element to focus on, but it has broader implications. If you look at China, I've said this before, Jensen Huang of NVIDIA said this, China is the world's second largest, probably the largest AI market to come, especially when AI starts to evolve into the real world, world models and hardware, everything from cars to robots to drones to gadgets, etc. Much of that has to be built in supply chains in Asia, most of that in China. And so this is unfortunate that the investors in the US and overseas are being bifurcated. We already saw, the US in many ways took the first blow at this, basically asking ByteDance, one of China's most successful tech companies, to basically spin off TikTok US for only 14 billion. It should have been at least 100 billion. It was a fire sale, as it were. And the Chinese got to keep the algorithms, the monolith algorithm, which is the secret sauce of TikTok. But the broader point here I want to make is that this is a tit for tat game that's going on. So my take on this development, and I'm hopefully not overtly optimistic, is that both Xi Jinping and Trump are supposed to be meeting in May for a grand tech, trade, tariff, geopolitics deal of some sort. It's been in preparation for a long time. It's gotten somewhat distracted because of the Iran Hormuz Strait war and issue that are going on. So I do think this may be just part of the overall chess game around that, basically trying to extract some concessions from the US side by not letting US investors, European investors invest in Chinese tech and then get exits out of it, or buy companies outright and have a two-way non-balkanized market. But there is a non-trivial chance here that this ends up being the permanent state of affairs, at least for a few years, which would be unfortunate at this early stage for AI technology, especially, as I said, given China is one of the largest, second largest market, or the largest market in AI to come. They have 3 to 4 a number of STEM graduates. The world needs huge amount of software engineers to do a lot of this stuff, and hardware engineers for that matter. And half the AI researchers today that Meta and OpenAI and Google and Apple and so on are fighting for in the US happen to be Chinese citizens and Chinese Americans who got their training here and are being paid astronomical sums. And I had a post up where recently 30 or 40 of these senior folks have been moving back to China, given this us versus them kind of environment that is unfortunately being really exaggerated, which is unfortunate. So I'm as optimistic as I am. I have a very keen eye on this, and it's a very important question for financial investors around the world in terms of opportunities and being able to move across national boundaries in terms of acquisitions, cross investments, etc., exits. And right now, that is a question mark. So those are the three things I wanted to focus on in terms of current investment environment: the big IPOs, the OpenAI questions, and then the questions around US and China around investments in tech companies and AI companies out of China. The gadget AI section I wanted to touch on is actually something that's personal to me in terms of as a long-term gamer. Valve, which some of you may know, is one of the leading companies in handheld gaming platforms and hardware, etc. They have a product called the Steam Machine, which got delayed. It was supposed to be out early this year. It's now going to be later this year. It'll be higher in price because of the memory and equipment shortages that, tech shortages that I've been talking about. But they reaffirmed yesterday, and The Verge had an article, which I'll have in the show notes, that they said that we will get this out in 2026. But, the price is uncertain. This by itself is not the core story. The core story here is that gaming industry, which has been the only thing that Microsoft on the consumer side has got left. Microsoft has evolved from being obviously a huge enterprise and consumer business over 30, 40 years under Bill Gates, then Steve Ballmer, and now Satya Nadella. Satya Nadella, having come from the Microsoft Azure cloud business, has basically made Microsoft mostly an enterprise business, with the only consumer gaming thing that they've got is Xbox, which they just changed management around under CEO Asha Sharma, who used to head up AI at Microsoft, or one of the leaders of AI there. And the reason I'm bringing it up is because gaming is turning into also a big area where open source software like Linux and Unix, which are the foundational pieces of software that actually run most of today's internet and world out there today. Even the Mac operating system has its roots in Unix and Linux as an example. But Valve's Steam Machine product is essentially one of the more interesting, and there'll be a lot more to come, that are basically going to wrest a lot of the gaming development away from Windows machines and Windows PCs to Linux. And that in itself is an interesting foundational shift that's interesting, especially as we start to see AI devices, because AI on games is a total untapped market. The ability for regular players, not just casual games, but triple games, to have a lot of AI assistance, etc. Those are all things that can be done much easier on more open source type of platforms. And so it's a trend that I'm very focused on, and I wanted to touch on it in the context of this Valve Steam Machine in my gadget AI bucket. And this is a multi-year trend. I'll have a lot more to talk about. There'll be a lot more developments. It's early days, but I wanted to highlight that segment, which takes us to our questions of the day. And one of them from a listener was, what AI gadget is the market over-indexing going into 2026 and 2027? And this one is a fairly straightforward one. I've written a lot about this as well. And for me, it's AI smart glasses. Meta is obviously ahead with their Meta smart glasses on Ray-Ban and other platforms. They've got 3+ million of these out. They've got all the additional versions coming out. Apple is supposed to be coming out with their smart glasses, as is Google and Amazon. And so there's going to be a lot of innovation around this, but it's still early days. And I think as far as AI wearables are concerned, this is the one where the market is probably more focused on than I think it warrants, given a lot of the technical difficulties for these things to do much more beyond take pictures and do onboard AI delivery, voice modality, etc. And there's a lot of work to be done here. So I'm just concerned that the market is over-focused on smart glasses with the expectations that this stuff is going to be a big category sooner than later. I think it will be an interesting category, but likely not as big and not as fast as people think. So that'll be my answer to the first question. The second question that I got from people is that what's the AI gadget that I'm looking forward to the most? And I'm going to be fairly basic on this one. I'm just going to say, look, I'm waiting for Google Gemini on Apple Siri, which should be hopefully made available around WWDC, June this year from Apple. A very prosaic, humble kind of ambition on this one from my perspective. But I think it will be cool if we have really workable AI that is easily accessible on Apple devices. Siri is just the start. And I have big hopes for what Apple and Google could potentially build together. Apple in particular, because they have over 2.5 billion users of their devices, where they have one of the most robust Apple stores and services franchises where they can literally build and enable third parties to build very interesting and at scale businesses around AI products and services, around the things with that are delivered, marrying the external AI products like Gemini into the Apple ecosystem. So that would be the one that I would be most kind of looking forward to in terms of gadget AI. Pretty kind of simple and straightforward. So that's the discussion I wanted to kind of go through today. As usual, I want to thank you for joining us. I do want to highlight I have a post from this morning on AI Reset to Zero, which I'd ask you to take a look at. It's post 1070, and we talk a lot about the Microsoft OpenAI deal reshuffling and the lawsuit that just started between OpenAI and Elon Musk and other topics. So you may want to take a look at that as well. So thank you for joining us for this episode, and I look forward to talking to you all tomorrow. Stay tuned.